Yo, what is happening, traders? Thomas here from VAGAFX. In this video, we are going to be looking at some of the beautiful order flow that's happening on the euro-dollar chart at the moment and some of the crazy setups that have occurred in between. Before we begin, guys, I do just want to say that although I do offer paid mentorship, I do love giving this education out for free on my YouTube, so it would be a massive help if you did like and subscribe, just to boost my channel with the fierce YouTube algorithm so I can get out to more people. Now, without any further ado, let's get straight into the video. So we're going to start off by looking at Friday's price action. So this was last week, just before the market closed. We can see that we've got this strong impulsive movement to the downside. Now, as always, guys, with all of my YouTube videos, we are going to mark out significant structural levels. That is major swing structure. We can see that there is a order flow reversal here. Well, technically it hasn't happened because we don't count two candle pullbacks. Actually, yes, it has. There has been a two candle pullback there. So this is the lowest point. We've got a low that's been broken by here and a high that's been broken by here. So that's where the order flow reversal happens, and the most extreme point simply becomes our swing low. So we're just going to draw this across. We're going to follow the market back and find the last one, which in this case is very straightforward. Go up. We can see that there is order flow to the upside, order flow to the downside, and depending on if you do count this as a break, personally, this is actually a one candle break, guys, so I would actually be using this myself, but I do understand some of you would be using this point as well. But you'll find in a second that it doesn't really matter, because when we do draw imbalance, you'll find that it'll be one of these 2 points anyway, because this is the fresh imbalance. This is historic balance. You can see that it has been mitigated multiple times. So this, even though this is the swing point, this would be the imbalance you'd be using anyway, as it's the last imbalance before the swing high. So we're going to draw this across. Now this zone you will find does actually get completely swept, and that's just because the market has taken so long to get back up to this point that the whole narrative has just simply changed, and the orders that we're at this price level, guys, the orders that we do look to reject the market when we place our trades, so much time has passed that the narrative has changed. The orders could simply have just been removed. We don't know, but the market does completely take out this zone. We do also have liquidity above it, guys. So if you did actually draw localized liquidity, you can see that there is an equal high by here. So we would have been looking at least, if not a avoidance of this area, we would have been looking for a reserved entry like this. You can see that there is actually more liquidity behind this zone. Again, we don't actually count spread hours, so this would be where we draw our liquidity to. So if you didn't ignore this area, like some of my students said, you would have taken a loss at this point. We're going to start playing price action. Now, when you do get these extended ranges like this, guys, you can start to look for internal setups. So that is when order flow reversals change and swing points form. You can take trades the same way as normal setups, but it will be internal to the larger swing range. Just going to draw this across just so we know where we're at. So this is what I mean, guys. There is a clear swing point by here. We call this in our community a internal swing. Just mark that on the chart. And you can see that this is very corrective price action, guys. So even though this is there is going to be internal swings formed, you're not going to want to trade this price action until we start seeing some more impulsive movement. I'm going to keep playing price. Draw this across. Draw this across as well. So you can see that we did actually get a reaction on this. You'll find that the reaction isn't sustained and it does actually get taken out. You would have had an option to actually lock this trade at break even if you did catch the entry. and the market sweeps upwards and then forms another reversal by here. So we're just going to draw this as the next swing point, guys. Obviously, this supply zone has failed. We know the narrative has changed, and we can start looking for long setups. So this is our new swing point. We're going to follow the market back. We can see that there is a low by here, but it's occurring between another major high and another major low. There is no structure being broken, so we're going to keep following the market back. We can see that there is a major low by here. It's only a one candle break by here, one candle break by here, and even by here, one candle break. So we're going to keep going back. This is just a minor swing point. Keep following the market back. You can see this is actually where the order of the reversal happened. This point, again, one candle break before a complete retracement. So this is the next swing low. Now, there is an order block formed by here, guys. But it has been mitigated once, twice. So we're not actually going to be looking at this zone. You can also see that it's formed during a very low volume time in the market. And although there is inducement for this, the inducement pretty much lines up with it. And we know that the markets do tend to sweep liquidity when there is 3 points touching. So you find that it could go like that. So although this zone may reject, guys, we're not going to trade it just because it is lower probability. But we are going to start looking for bullish opportunities simply because the swing high that we were looking at has now broken. And this is the most recent price action. So we know that the momentum for now is bullish. So we're going to keep playing the market. We're going to wait for another structure break. We can find our next setup. If we come across by here, we can see that this swing high has now been broken. We do have a 2 candle break indicating a continuation of momentum. And we're going to wait for this major low to be broken just to confirm the swing. You can see that we've had a 2 candle break by there as well. We're now going to draw our new swing across. So this is the new swing low, swing high, sorry. And as the momentum is still bullish, guys, we are always going to expect the order flow to continue. Whatever the last significant structure point was that broke, that's where we are going to expect the markets to continue in the same direction. So we're going to follow the market back now and find the last swing low. We can see a major low by here, guys. How do we know that? Because you can see that this wick is actually lower than this wick. But if you follow the market across, 1 candle retracement, 1 candle retracement. So there's no valid break by here. We're going to keep following the market back. You can see that this is clearly where the major structure reversal happens. We can see lows being broken. We can see highs being broken. So this becomes the most extreme point, or the swing point. This is our new swing range. So this is the current swing low. I'm just going to draw this back. This is the current swing high. So we're going to look for a bullish setup. Now we can see that there is some nice localized liquidity for our zone. We can see that there is imbalance formed by here. And we can also see that this is a high volume point in the market. This was just after the US Open. It's actually around 3 AM GMT. We can see that this is a very large zone, guys. If we did actually draw a entry at this point with our stop loss at the bottom of the zone, just to protect us, as we know this swing point is protected. The RR, sorry, I can't even speak properly, is going to only be 2.3. So what do we do in these situations, guys, when we do have a low returning trade, or just because a 2.3R trade is just not going to be effective in you actually growing your equity over time? Because if you are targeting only 2 or just over 2, you are going to need to be winning at least 50% of your trades And anyone who's saying that making money on 50% of their trades are either talking out of their ass, or they are trading a scalping or a low, a high strike rates, low returning setup. We as precision traders are never going to see above 50%. Any mentor who does trade like this and says that they get over 50% on setups like this, targeting 5R to 10R or even 20R and upwards, they are simply lying. But if we are looking at setups like this, guys, with our way of trading, you do want to be targeting trades that are at least 5R in profit. And this way, your winning trades are going to far outweigh any losing trade you make. So what we're going to do, guys, is we are going to refine this zone. Now, when we do refine, I will be releasing a lesson in my course on this and a future YouTube channel on this subject. But with refinement, we are going to be refining down to a time frame that is at maximum around 2 times smaller than the time frame we are using to analyze. So we're looking at the 5-minute time frame now. We're going to go down to either the 3-minute chart or the 2-minute chart. Personally, I like to use the 2-minute chart. We are going to use the last counter trend candle before all imbalance. So in this case, it would be this one. You can use this one, and you will find that a lot of the time it will hit, but you will also get left by the market with a lot of your setups, because on lower time frames such as the 2-minute, even the 1-minute and the 3-minute, imbalance doesn't always get completely mitigated, guys. And when I say that, I mean it could come to somewhere here rather than down here before rejecting. So we've got our zone drawn. You can always keep the other demand zone drawn as well. This is why you'll sometimes see my charts like this. And this is also why many SMC traders do use 50% of the order block, guys. They are simply just using a lazy way of refinement, which I don't personally agree with, simply because sometimes the imbalance won't start around halfway down. It will start somewhere up here. And the traders that are always using this 50% rule will often get left by the markets. I do actually get quite a lot of people messaging me asking me why they're getting left behind, and this is one of the main reasons why. So we'd be looking to get into this trade. You'd have your order drawn by here, your stop loss drawn at the bottom of the zone, just because you know it is protected. There can sometimes be, or well, obviously there is liquidity everywhere. So you can, if you want to, put your stop loss by here, even below the swing low, just for extra safety. Personally, just because we did have a small sweep by here, I was happy to get involved with my stop loss at the bottom of the zone. And this way, guys, you're getting more than 5R on this trade. So we're going to start playing price. Now, you will often see me draw liquidity before my entry, such as inducement. This is more just to confirm in my mind that the trade has higher likelihood of tagging. Because the more corrective this is, guys, the more you know that the market is likely to impulse and continue on its original order flow. And we can see that this actually occurs around the London Open, which you will find happens quite a lot. Like I said, if you did use the small candle by here, which some of my students did, you would have still been tagged into this trade. And I'm sure if you do go onto the 1-minute chart, even the 30-second chart, you will find that the imbalance does get mitigated completely. So when you find that your trade is going to into drawdown slightly, it is just a mitigation of imbalance on a sub time frame. And this is why we trade the Euro USD, just because it is a very efficient chart. And by efficient, I mean imbalance does get mitigated completely before order flow continuation. So now we have our next break of swing structure. We are going to look for our next swing structure point. Now, before that even happens, guys, you can already follow the market back just to find the last swing low that's formed. And we can see that there is a major high by here. Just zoom in for you. Sorry, this is actually the major high. You can see that that was broken with a 1 candle break and then a complete retracement. We're going to follow the market back and find the last major structure reversal, which is clearly here. And this happens just to be the last rejection of the previous demand zone. So this becomes the swing point. Just going to draw that across. We're going to wait for the next break of major structures to the downside, just so we know where our swing high is. So we do have a major low by here that's formed, so that is going to be our next major low. The major high broke. We follow the market back. That's the major structure that's needed to be broken, and that has now been broken with 2 candles. This becomes the next swing high. So this is our new swing range, guys. We're going to follow the market back and look for imbalance. We can see the imbalance does clearly start here. And this is our last order block. We're going to place our position by here with our stop loss at the bottom. And we can see that again, the RR is over our expected or target RR ratio. So we don't even have to refine this. We can see that we did have a wick by here, but you can see that it hasn't mitigated imbalance completely. So we're good for another rejection by the market. These are all aggressive entries, guys. We do actually teach aggressive entries to be the more probable or profitable setup, just because you are trading fresh zones which are more likely to still contain unfulfilled orders to obviously reject the market and cause further imbalance. But we do actually take advantage of confirmation entries. They are slightly different as what you may see standard SMC traders use. So as normal, we will be looking for a short or a change of character. I personally don't call it that just because charges are from Wyckoff. They've sort of been stolen or rebranded. I'm not too sure how that's happened. But we do look at structure breaks as you would a charge or change of character. We can see that there is a minor high by here. I know that's minor just because it's happening between a major high and a major low. And this is the major high that we do want to see broken. Do get that. And there's obviously imbalance that's formed. It's obviously broken now with 2 candles as well. So if you were looking to get involved in this setup, you can place your trade at the start of all, before all imbalance. Obviously, there is going to be liquidity beneath here, guys, and you still do have this order block, which you can find can get mitigated again. So if I was going to be taking a trade, which some of my members did get into, and I will show you evidence of that in a second, I would be looking to set my stop loss a bit more generously with this one. And you'll find that you still get very high returns in this trade. Again, you want to be looking to target at least 5R on these trades. You can actually get into some very high returning trades with this strategy, much higher than 5R. You can get upwards of plus 10. In rare instances, even 20R. But you will find that you can make good money even targeting 5R or thereabouts. We do get that confirmation entry now. You can actually see that if you did have your order set at the bottom of the zone, you would have actually been taken out on this one. So that's another couple more trades if you did get involved. And again, you don't have to be taking all of these setups, guys. I didn't even take all of these setups myself. I will show you my profits that I actually took from my trades. But the market does contain many opportunities like this. And this is why we do trade the euro dollar, just because it does like to come back down into these swings and completely mitigate imbalance before order flow continuation. And you will find that it is a very consistent pair in terms of staying in the same direction. It will trend. So here's a showcase of some of my students getting into these same zones. We've got one by here. We've got a trader taking a trade from this swing low by here. same swing low by here and by here. You can see that they're all trading from the same zones, guys. It's because we're trading from the same strategy. Obviously, we've got the aggressive rejection here. This was the confirmation entry I just went through in the video. You can see both zones by here as well. I do have other students that we do converse on Instagram and things, but sometimes these communities can get a bit full of noise. But you can see that the basis is the same. We are all taking the same trades as we are trading the same strategy. As mentioned earlier, the majority of my content is free, so if you did want to see more, please subscribe and follow me on my socials, which I do upload to daily. Taking everything in online from multiple sources can be difficult, so if you did want a more structured approach to learn exactly how me and my students trade, you can do so through my course and community, which can be found through the link below. I will catch you in the next video. Hope you all have a really profitable week. Peace out.